All right, you guys ready to go ahead and get
Rock and
started?
roll. Yep,
Yeah.
let's do it.
All
Yeah.
right. Good morning, everybody. My name is Robert Davis. I'm the Veterans Counselor and Certifying Official. Most of you know me since I handle your GI Bill benefits. So today we have a presentation about VA home loans and finding that home. With Louis Renteria and Vito Scarnecchi. Did I say that right? Scarnecchi?
Close enough.
Yeah. And so they are both Marine Corps veterans, and they're both San Jose State alums. So we'll go ahead and go through the presentation first, and then hold your questions to the end. But at the same time, if you have any questions that you do think about, go ahead and put them in the chat, and they'll go ahead and address it. Also, we do have your questions from the Google form that I sent to all of you. And we'll go ahead and they will go through all that, answer all those questions. All right, so let's go ahead and take it away.
Luis, you want to shoot?
Yes. My name is Luis. I am with Cross Country Mortgage. I've been doing loans since 2004. So I served in the Marine Corps from 1996 to 2004. And I got out, finished college, and then got right into the industry accidentally, as my parents were trying to refinance and they were getting ripped off, and I didn't like that. And I learned about it during that transaction, and then I fell in love with the industry, and here we are. 2008, when the market crashed, all the loan programs went away, and I hyper-focused on VA loans. So I learned the ins and outs of the VA loan, and here we are. Vito, go ahead.
Yeah, so hey, I'm Vito. I'm a Marine veteran. I was a mortarman 0341. I was a Ford Observer and an 0369, which is a platoon sergeant. I did it from 87 to 99, and believe it or not, I graduated with my bachelor's in business at San Jose State in 2011 when I was 41 years old. But I went back and got my business degree because I wanted to learn how to run a business. And I've been doing real estate for about 17 years now. I was an independent broker up until, say, about 6 months ago, and I moved over to Coldwell Banker just because they have more administrative opportunities, so I don't have to deal with that and focus more on building my business. And Luis and I met, I'd say, about a year ago.
About a year ago.
At the VSO at San Jose State, and we were talking to Bob, and we were just kind of hanging out, talking about VA loans and everything, and talked about a program that we could put together, and this is what we're doing today. So the program's pretty amazing. It's really helpful. We'll go through all the process real quick, and then we'll talk about the opportunity at the end. And again, if you have any questions, shoot it in the comment section down there in chat. And I have to figure out how to share my screen. Stand by. There we are.
Ramiro, maybe you can introduce yourself while he figures it out.
While he's being shy, I have a team of 4 other agents that we work together. One's an Air Force veteran from Vietnam era. I have another agent that just joined us. He's a council member within San Jose. And then I have another agent. She's a full-time mom and agent as well. So we're out here helping a lot of people pretty much every day. So go ahead, Ramiro.
Yep, found the unmute button. So by the way, my name is Ramiro Garcia. Feel free to call me Ramiro. I was in the Marine Corps active from 82 to 85. Been in the mortgage industry since about 2004. Prior to that was in the mortgage industry, 2004 as a loan officer. Prior to that, since about 2000 was operations, underwriting, processing. And so I was also in the Marine Corps and 0341. And here I am. It's been a good ride.
Yeah. So 0341 is a mortarman, and if you're Army, that's a 11 Bravo, I believe. And you, Ramiro, you were the 81s, or were you a 60?
81s. So I
Yeah.
was in the weapons platoon, and so we had dragons with us as well.
All the cool stuff.
Yeah.
Yeah. You can go to YouTube now and watch that stuff. It's pretty.
Hey, is that Tom Cruise on the slide?
Yeah. Look at that. Me and Tom. That was my weapon of choice right there. That was a 60 millimeter, the M224 60 millimeter mortar. And at one time, I was the fastest mortarman in the Marine Corps for large deflection changes. Not to brag or anything. All right, so this presentation is really just to talk to you guys about what the VA loan, the power behind it for you as a veteran, and talk to you about qualification, how you can qualify for it, and the process of getting started all the way to the end. And the big question here, this is me in Narita, Japan, landing. We were at Fuji for a month or so, training, doing that. And but the big question here is, are you eligible? And most of you are. If you've done 90 days consecutive active service while during wartime, or 181 days consecutive active service during peacetime, that means you could go out. If you're a reservist, you could do special B-billet jobs like embassy duty or something like that, and spend 6 months there, you qualify. Also 6 months in the service of the Guard or reserves. That's your qualifications. And I'm sure you guys, so the value behind the VA loan is that there's no down payment. Now there's some back and forth about that, and Luis and Ramiro will jump in as well, but no down payment. You don't have to have a huge down payment, like a 20% down. If you're buying $1 million house that's $200,000, you don't need that. The other options are like an FHA, where you have to have 3.5% down, or USDA, where there's other issues around it. It has to be more of a rural environment, but the VA loan is absolutely 0% down, zero money down. And there's no mortgage insurance, which is nice because that's just an added cost that you just kind of just throw away, kind of like rent every month. And there's no real value to it. And they're amazingly competitive. Luis will tell you here in a few seconds that they're just on par with conventional loans.
Oh, no, not even at par. Far better. So right now we're locking stuff at about 2.25% with like very little cost, maybe about a 0.2, maybe about $500, $600 fee. So it's super, super competitive. The rates are phenomenal, and there's no mortgage insurance. That's the big one. So let's talk about what is mortgage insurance, because I know a lot of you are first-time home buyers and you don't even know what that term means. So, or maybe you do, but let me go over it really quick. So mortgage insurance, say, let me see who's on here. Rodrigo comes to me and says, hey, I want a $500,000 loan. I have nothing down, help me out. And I say, oh no, you need at least 100,000 down. Sorry, and I turn you away, right? Then you're gonna go tell Vito, because he's the one that referred you to me. Hey, Luis is a jerk. He wouldn't lend me that money. Man, I can't buy that house. Vito says, hey, why don't you go talk to him? I'll give him a call and set him straight. So Rodrigo, you come back and I say, hey, I got a call from Vito and he said to give you the loan. Boom. All right, here's the loan. Go buy your house. All good, right? Now, Vito, in this case, is going to call you and say, hey, Rodrigo, like you, because of me, you're buying that house and I need some insurance, right? So I'm going to charge you, $200, $300 a month, just to make sure that you keep paying. So in this example, Vito would be that FHA mortgage insurance, or there's private mortgage insurance. He's basically insuring me that the loan will be paid, because if God forbid you don't pay the loan or make your payment, Vito's going to pay me, and then
then I take your house, and then I break your legs, because I'm Vito. I break legs.
Vito, yeah. That's really what mortgage insurance, in a nutshell, that's what it is. And in this case, VA would be veto. The VA will insure and not charge you a monthly fee. So that's the beauty of it, and it's such a huge benefit, and it's underused. And that's our goal, is to spread this knowledge so that
Gospel.
it's available, and you can use it. Now, let's talk about the down payment. And again, if you have any questions, I know I'm flying through this, but if you have any questions, just pop them into the chat. Let's talk about down payment requirement. He did say 0 down, and the VA does not require down payment. And this applies up to, I think it was we're at $3 million. $3 million purchase, you don't need down payment. And I know I've had the largest loan I've had this year at the beginning of the year, when they changed the guidelines to allow for basically no limit on the purchase price with no down payment. It was 2.5 million. So I had a veteran, again, wife works at Samsung. She's a director. He works at Tesla. Boom. They have the income. They wanted to buy a house in Los Gatos for $2.5 million, which wasn't very fancy, let me tell you. And boom, they came in with 0 down. Don't even ask or think about what that payment looked like, because obviously it's a $2.5 million loan.
You can do it right here.
Yeah, it's pretty bad. So again, it's excellent. It's an excellent program. And before this this down payment change, you needed to come in with your max loan amount would be $765,000, which in the Bay Area, it's a little tough if you want a single family residence in a decent area. So again, no down payment, no mortgage insurance, and then the interest rates are crazy low. Also, the credit requirements. I've had customers come in with minimum FICO scores of 600, 605, 620. Anything below 600 gets a little rough, and I could still work on that and guide you so that you can have a better increase your FICO score. But yeah, that would be the first step, is to get your FICO score over 600 if it's not already above that. Back to you, Vito.
All right. Sorry, I fell asleep a little bit there. Sorry. So what's the first step you want to take when you're ready to buy a house? Talk to Luis. Get your financing in order. Make sure your credit score is done. Make sure you lower your outside the house debt, your car payment, your credit card bills, everything. Make sure you're financially ready to take on a mortgage, because it's a long-term relationship. It's 15, 20, 30 years of making payments. And a car payment's one thing where you can get it up to $700 or $1,000 plus insurance, etc. You're talking about thousands of dollars every month that you have to shell out. And you're responsible adults. You're getting ready to do it. So just be mentally prepared on the financial side.
Yeah, there is so much freedom, though. I know Vito's saying, oh, well, you got this large down payment. Well, there's so much freedom. I'll give you an example. Let's just say that you buy your first condo, entry-level condo, and your payment is $2,500, right? And you know that the rents in that area, let's just say they're $2,000 a month. So after about, like, the first year is going to be the toughest. After a year, the rents, I swear, they kind of catch up. And now you would be paying that for rent anyways, right? So now you're at $2,500. That payment doesn't change. And the rents are now 25, and then it gets to a point where the rents are 3,000 and you're still paying 25, and now you're looking very, very pretty. In addition, you have the tax deductions, right? You're able to deduct the mortgage interest, which lowers your tax liability. So let's just say you make $100,000 a year, and you have a $40,000 worth of mortgage debt or mortgage interest that you pay for year, you're not going to get taxed for 100,000. You're going to get taxed on 60,000 because you're adjusting your income down. So that's another benefit that's sometimes overlooked.
Yep. And that's what we'll go over the first time Luis and you sit down. You guys talk about what
Yeah,
you're
I go
making,
over
what your
all
debts
that.
are, how you can adjust your liabilities a little bit, and your credit score, how you can improve your credit score, etc. And then we go and start touring houses, and we go through that process as well. And again, the number one reason why you want to use a VA loan, guys, it's the 0% down. It makes it very, very easy. Back in my day, many years ago, probably before most of you were born, we bought
Civil War.
Yeah, Civil War muskets, right, Romero. We bought our first house. I had horrible credit, like 500 something, and we bought a $225,000 townhouse, and we were scraping and scrimping, and we couldn't qualify for the VA loan because it was 180 or 175,000 at the time.
Yeah, that's right.
So just the pricing in the market far outpaced the VA loan. So it just made it really difficult for us to do it. So we wound up using an 80-15-5, where we had 5% down. And we had a first mortgage at 80% and a second mortgage of 15%. And because I had such horrible credit, I was paying like 13%, I want to say, on the second. Within 6 months, the value of our house increased by 20%, and we refinanced, and all that went away. And ever since then, my credit's gone, sky high now. So I'm over 800 pretty much religiously. But it's also because I let my wife take care of the bills. So can you buy a house 0% down? Yes, but you're going to need closing costs, and the closing costs can be anywhere between 2 and 4%, depending on a lot of situations, which we'll go into in a second. And they could be points to buy down the loan. There are closing costs, there's escrow fees, there's appraisal, there's inspections, there's a whole bunch of other things that could happen. And we'll go through that in a minute, but a rule of thumb that you want to look at to know who pays what depending on the county is this spreadsheet right here. And I can send this to you. Bob can send this to you, or Luis can send this to you. But if you're buying a house in Santa Clara County, it's a seller pay county, which means traditionally they pay the escrow and title insurance and other transfer fees. In San Jose, you split the transfer fee 50-50 with the seller, if that makes sense. If you went up to Alameda, it's a buyer pay county, meaning you're paying the escrow fees, the title fees. There's some stuff that the seller still has to pay as well. And then there's a county transfer tax. And if you're buying in Hayward or what have you, then you're also splitting that with the seller. So that's why it could be 2%. That's why it could be 4%, because you just don't know. Getting back to this real quick. All right, so there you go. Up to 4% for closing costs. You could require an inspection. Here in Santa Clara County, we typically, as a listing agent, we typically have the inspections done for the buyer because we want the offers to come in as is. In Alameda, sometimes that doesn't happen. In different counties, it just doesn't happen. So be prepared. If you're going outside of Santa Clara, you may have to pay for an inspection. Sometimes in Santa Clara, you may have to pay for an inspection. The appraisal is about $600, could be upwards of 700. Right now, because there's a refi boom, appraisers are being very cocky, and they're kind of being assholes and charging people a lot of money to do these appraisals right now. And there's other fees as well. So if you're in the hills, there might be like a septic tank that you want to have inspected or repaired, appliances repaired. So those are any kind of miscellaneous fees that might be popping up. When you buy a house with a VA loan, you're required to have a pest inspection done. And it's also required that you have Section 1 done. Now, yesterday, Luis asked me what's the difference between section 1 and section 2. Section 1 is any kind of infestation, which is mold, mildew, bugs, termites, raccoons, mice, what have you, anything that the inspector sees evidence of as an infestation. He's going to call that out. And that's a section 1 item that needs to be cleared up before close. Section 2 is, maybe a broken window or a crack in the wall, maybe like an appliance that he saw that doesn't work or something. It's outside the inspection of the pest part. So it's another trade call out. And because he sees it, he has integrity, it's his job to call it out. So he's protecting you so you know what you're buying. Underwriter requires anything section 1 done. That could be a tent. When you see the big circus tents on a house, that's fumigation, up to pest eradication and mildew mitigation.
And really quick, Vito, the purpose, let me add, the purpose of this pest inspection and pest clearance is to make sure that you're getting a sound home. The last thing the VA wants is for you to move into your house and then a month later, you already have all these moving expenses and, you got to buy furniture and all that stuff. And then, you have, $50,000 in foundation work or roof work or whatever. So VA is very keen on that. They're looking out. So they are kind of a pain in the ass when it comes to these inspections, but it's to protect the veteran, make sure that you get a sound home. Basically know what you're getting yourself into. You can pay for the repairs, but you cannot pay for the inspections. So all inspections need to be paid either by the seller, the agents, or the lender.
Yep.
We don't even charge for the, this is just personal. I don't charge any of our veteran customers for the appraisal fee. That's just like right off the top. Because if it does not appraise, or if there are issues that are surface in that inspection, I don't want the veteran to be out $550, $650. We just kind of have that as a program.
And we'll go into some other incentives here in a few minutes. So this is the basic timeline of buying a house. Again, the first thing you want to do is talk to Luis or Ramiro and get your finances in order. And the reason why is because if you're thinking, I can buy an $800,000 house, and you can really afford a $650,000 house, the differences are tremendous depending on where you go. And if you're thinking, I want to buy a $1.5 million house and $1 million house, the differences are tremendous. And you're just kind of, spinning your wheels, trying to figure out where you want to go. Let's say you fall in love with living in Almaden Valley and you can really afford Blossom Valley where I live. Well, that's just the way it is. So it's smarter to get your financing done. And then once you're done with that, we have a letter from Luis and Ramiro, and we're ready to go. We know what we're talking about. We know what price range we're looking at. You tell me bedroom count, bathroom count. Yes, I want a pool. No, I don't want a pool. Put that into the MLS. We find a couple homes to go look at, and then we go into the bidding process. And the bidding process is a little more complicated. I don't want to get into this a whole lot, but I have a package that helps enhance the chances of you getting the house when we do this process. Enough said of that. When we do that, once you're in contract, then we go into the process of having to have the appraisal done. You need to bring in a deposit, making an initial deposit. Could be $1,000, could be $10,000, could be 3% of the purchase price. And then we go through the due diligence part of buying a house, which is month 3. Due diligence means you have the ability to look through the inspections that are provided for you. And if you have any questions about that, like Luis said, hey, there was a foundation comment. I want to learn more about this foundation, or there's a roof part that I want to learn more about. Then we go and do more investigation on those parts of the house. If you have questions about the inspection or the disclosures, then we go through and answer those questions you have to the best of our ability before we move to the next part. And then after that, after everything's settled down, then we get final approval of the loan. And then Luis's people push a button, they send docs to escrow, and they have this big, huge pile of documents you get to sign. It's awesome. It's like,
No, it's not that thick. It's not that thick.
okay. So at the end of the day, we go through and sign off those documents. They go back to the lender. Everything's good. They push another button. The money gets transferred over to escrow. Everybody gets the money that they're supposed to get. And you, as a veteran, you get a home. And that's it. And then we meet. I give you keys. And then we meet for beer every once in a while at a brewery or a restaurant or something like that.
Are you plugging tomorrow's, or when is it?
Next Thursday.
Next Thursday's event already.
Yeah. So next Thursday, Strike Brewery, 4 to 6. Is that a good time, guys? 4 to 6?
It's fine with me. I'll put that in the email if you want.
Luis?
Yeah, absolutely. 4 to 6.
Come meet us for a beer, and we'll buy you guys a beer, and we'll hang out and talk, and we'll have some fun. So that's next Thursday. We'll put out the dates.
Yeah. So I just noticed this, and how do you begin? I mean, I had a question. How do you begin the pre-approval process, right? Well, just give us a call, right? Ramiro or I, or you'll have our contact information. And really what we're going to do is talk about your needs. We're just going to ask questions. Okay, what are you looking to do? And depending on that, we'll either take a quick, short application over the phone, over Zoom, or we'll send you a link for you to do it. Once you fill that out, we'll review everything and we'll say, okay, this is what we have, and then we'll take it from there. Because what I've learned, and I want to say about half the time, people think that they only qualify or they don't qualify for enough. So just like sometimes customers feel that they qualify for $1 million when they only qualify for 500. Other times, like half the time, they're like, oh, I only qualify for 500,000 and I want that $1 million home. So it's always good to just look at everything, see where you stand, and then take it from there. Once we take that questionnaire, we're going to run your credit, and then we're going to request your W-2s, bank statements, awards letter if you're service connected disability. If you're receiving that, we can use that as income. We can't use the VA, the GI Bill, because that's temporary. That's while you're going to school. But we can use your service-connected disability income. And once we put that all together, then we tell you, okay, this is how much you really qualify for. Happy shopping. Then that's when we hand it over to Vito, and Vito takes that and says, okay, this is what they can do. Let's go. And yeah, you do the fun part.
Yeah. So that's pretty much, I mean, there's a lot of moving parts. That's the point, right? And I play Sherpa, and Luis and Ramiro play the financial guru, and we kind of go through and guide you, because it's not just us two working together. We have escrow, we have title, we have inspectors, we have appraisals, we have moving companies. We have a lot of things that we have to time out for you to make sure that it's smooth as possible. And a lot of times there's some stuff that ruffle up, and you have to realize that we're all human. We make mistakes, but we'll fess up to it, and we're good about it. So, all right. Do all homes qualify? No. Well, we mentioned this before. Your house has, no, it's true. It's absolutely true. Your house has to be habitable. It can't be falling over. It has to have plumbing. It has to have appliances. It has to have heating. It doesn't necessarily have to have cooling, but it has to have heating. It has to have a bunch of stuff that work. And that's why we're here to protect you, to make sure those inspections happen and we're giving you a viable, habitable house. So no fixer-uppers. You have to be owner occupied. And for condos and townhouses, they have to be VA eligible. They have to go through a certification process, which I think is just a couple pieces of paper. But again, they have to take a look at the reserves. the documentation of the HOA and make sure that they're being managed correctly before they get certified. So, Luis, let me ask you a question.
Yes, sir.
If I was a student in San Jose State and I wanted to buy a 3 or 4 bedroom condo, and then with the intent of me living in one room and renting out the others to other students, could I do that?
You cannot.
I cannot.
You cannot.
Why not?
Because that's border income. The VA does not allow for border income.
Okay. What about a duplex? Same situation.
Yes, yes. So you can use the income. Okay, so check this out.
I'm
It
checking.
could be a duplex. This is exciting stuff here. So listen up. So 2 unit, 3 unit, 4 unit. You can buy up to a 4 unit using the VA with 0 down still. Okay. Now, you buy the 4 unit, you can use the 3 of the unit. You got to live in one, but then you have 3 units that you're going to rent out. Well, we order a rental survey to see how much those can rent for, and we can use that as qualifying income. So really, you get into this fourplex, and you basically have income coming in right off the bat, and you live in one. And I've seen it where a veteran pays like $500 a month out of their own pocket, and they have the 4 unit. It's pretty cool stuff.
So we can't buy a 16 unit apartment.
No, 4 unit is the max. But
Yeah.
even if it's a 2 unit, you can use that other unit as rental income, qualifying rental income.
Right. And that's mostly because 5 units and more fall under the commercial loan or
yes.
commercial property. And we have these things called RESPA guidelines. Don't ask me what it stands for, but it's there to protect you as a consumer. Once you get into 5 units or more, then you become an investor. And it's more like a carpe diem thing where you have to know what you're talking about before you buy it. So that's why it's for. Do manufactured homes qualify? Do you want to answer that?
Oh, go ahead.
Oh, okay. Yes, if you own the land that the manufactured home is on. So
Really?
Really? I feel like we talked about this already. Yeah, so if you went to a mobile home park, like I have a house that's listed, and it's actually in contract right now. I have a mobile home, manufactured home at Villa Teresa on Santa Teresa Boulevard under contract. It's in a park. It's leased land. If you're paying any kind of lease whatsoever for a manufactured house, that does not qualify. You can buy that same house and then have it moved to a piece of land that you buy, then it would qualify. Choosing lender. Well, we've already taken care of that because you have Ramiro and Luis, and that's all taken care of for you. But mainly because you want somebody that understands the process and has gone through it multiple times. And, at the end of the day, you want somebody that's going to protect you. And these 2 guys, that's what we're doing. We're all brothers and sisters here, one way, shape, or form. I know you can make fun of us because we're crayon eaters, and we'll make fun of Bob because he's a squid, etc. But at the end of the day, we're all brothers and sisters.
I scored high on the ASVAB. I didn't eat crayons.
You have to score high to be an 0341, right, Ramiro? See? So don't even go there with us.
He gets the premium crayons.
Crayola top shelf. They're flavored.
Pastel flavored.
So it's the same thing. We've been doing this program for a while now, and we know the process. We know how to protect you. We know we're here. We're really here to help you. And here's the best part about working with Luis, Ramiro, and myself, and Dan. When you work with us through the Veterans for Veterans program and you use a VA loan, I give you half of my commission back towards closing costs. Now, it's not half what you think. I work for Coldwell Banker, and they take a nice big chunk out. Whatever's left over, you and I will split. You won't get greenbacks for that. That goes towards closing costs, because the problem here in San Jose and Santa Clara County and most of the Bay Area is it's a seller's market. And if you went up with a VA loan and say, hey, Mr. Seller, can you pay for these closing costs? Because in a VA loan, you're allowed to do that. They're going to be like, I'm going to choose this other guy who's not asking me to pay the closing costs because it's more money in my pocket. So the reason why we do that is, one, we want to say thank you for serving our country, just like we did. We're all brothers and sisters, but also it helps you get a leg up on being a little bit more competitive when you're using the VA loan. So for example, $1 million house, if you bought $1 million house, it's just easy math for me. At 2.5% is $25,000. Coldwell Banker is going to take, say, 25%, so 17,000 is left over. You do the math, you get half of that towards closing costs. It's not going to pay for everything, but it will certainly help.
It gets pretty close. Again, depending on the county. If you go to Alameda County and you're buying in Oakland or Berkeley, where they have a $15 per thousand transfer tax that the buyer needs to pay, well, yeah, that's where it gets a little dicey. But if you're buying in Santa Clara County, that's a seller paid, and like Morgan Hill, Gilroy, they don't have a city transfer tax, so the fees are lower. Then yeah, it pretty much covers everything. And what I do as well, we add another credit, lender credit, to help offset all those fees, in addition to the no appraisal. And then another strategy that I've used in the past is where we, instead of getting that 2.25% interest rate, we'll bump it up to 2.75, and that generates a lender credit to help pay for that. Sometimes it's good, sometimes it's not, depending on the market. I would never put you in a risky situation, meaning I'm not going to put you in a 5% interest rate loan knowing that the rates are going to go up in the near future. Now, if I'm very confident that the rates are going to stay flat or go down, then yeah, I'll put you in a 5%, all closing cost credits covered, and boom, you're done. Right now in this market, I would not, because who knows what's going to happen as far as rates in the next 6 months with the elections coming and inflation supposedly going up, but it's not really going up. We don't know, but the appreciation of homes are through the roof. They're breaking records. We have appreciated something like 7% for the year, which is incredibly high. And
considering the fact that we went through 3 months of no
COVID. Yeah. So yeah, it's insane. I mean, the market is super, super hot. You would think everything would slow down, but nope, the demand is up, up, up.
We have a few different indicators that we talk about when we talk about the housing market and showing what happened. You see that the market kind of dipped. And when I say you see me going up, it's because the days on market went up. And it just kind of stalled out for 3 months when March, April, May happened. And then all of a sudden, that demand never went away. The demand just kept on getting pent up. And then when we started opening up again, people were buying houses in droves, so much so that it outpaced inventory or supply. And if you know business or economics 101, prices just continue to soar. And people are begging and pleading to get into houses. So right now, it's a good time to be a seller. That's just in San Jose. You go to different areas, like in Hollister. Hollister is popping up crazy right now because what's happening is, like downtown San Jose, San Francisco, New York, all the big metropolitan areas where you're paying, $5,000-$6,000 for a 1-bedroom apartment. They're like, hell no, I'm going to go somewhere else and I can work out of my house. So I'm going to go to Hollister where I can buy, a 4,000 square foot house for whatever, and it's going to be about $5,000 a month. So it's all fair and equal. So Hollister is seeing a bump. Gilroy is going to pop here pretty quick. So there's a lot of different indicators as to that, but that's another conversation when you're ready. One more plug. I have a YouTube channel. I post new videos every week. If you want to take a look, it's all about real estate, but also fun things to do. We do walkthroughs of different wineries and breweries and restaurants, that kind of stuff. But we also talk about real estate, loans, probate, and trusts. Yesterday, I went on a big 10-minute diatribe about why you should have a trust after you buy a house, and obviously VA loans. So take a look at San Jose Living. You just go to YouTube and type in San Jose Living, and it'll get you right there. And that's it. That's us. I don't have a picture of Ramiro yet, so we'll just say that he's the guy getting kissed.
No.
Oh,
Give
I
me
mean,
the kiss.
kissing the dog. Yeah, there you go.
That's a devil dog. That's
Yeah.
a devil dog.
All right, all right.
All right. So, do we have any other questions, or do you want me to go through the same questions from yesterday?
I've added a few questions in the chat, but if any of the students have any questions, you can just unmute yourself and
Yep.
ask, or go ahead and type it into
Who
the
do we
chat.
have? Pin, Charlie, Patrick, Rodrigo, Joy, and Kui. So
Okay.
what do we got? Let's see.
I can read the first one. This is more to you. As a veteran student, our only source of income could potentially be our VA benefits. During the home loan application process, there's a section for income verification. Can we use our VA benefits for income verification? Would we be approved for a home loan if our only source of income is our VA benefits?
Yes, you can, and no, you can't. So it all depends what type of benefits, right? So if it is the GI Bill, well, you know, for educational purposes, then no, you cannot use that for qualifying income. If it's service-connected disability, yes, you can.
Speaking of that, if you're having issues going through Santa Clara VSO, getting rated or what have you, I know Bob's been able to counsel you on getting rated with the VA. If you have any other issues, financial, what have you, and you don't know where to turn, look at NovaVet. I don't know if you've met with them yet or talked to them, but there's a website that gives you hundreds of different opportunities and options, and they're there for you. It's all volunteer. It's a great unit, or a great bunch of people, and I was volunteered to be the director of marketing for this, so I do a lot of outreach for them, and they're good people. They're all here to help, and it doesn't cost you a penny. So next one, can you use two types of loans when purchasing the home, the VA and FHA at the same time?
No, you can.
I wouldn't need to. You wouldn't need to.
Yeah, you don't need to. FHA, no. VA is far superior than FHA.
FHA just lets you reduce your down payment to 3.5%.
3.5.
But you also have to pay PMI.
Yeah. Yep.
So,
and then the rates are higher. So no.
Should I think of buying a single house if I'm the only one who works in my family? I currently own a mobile home. How many people are in your family? Who is this from?
Hello, Victor. This is Kui.
Hi, Queen.
Is the VA loan the unlimited financing still have unlimited, and how long it gonna be? Are they only allow it for 1 or 2 years? Or do you think it will be like that for a long time?
Go ahead.
Was it the unlimited? Is that the question?
Yes.
Up to 3 million, right? Or
yes.
is that
right?
Yes.
So Congress passed that act at the beginning of this year, or it got last year, but then it got approved and went live at the beginning of this year. So it took an act of Congress to get this. So it'll probably take an act of Congress to remove it. So we're good for now.
Yeah, so the strategy you could use is because you'd use your parents' income right now to qualify, you would have to do like a 50-50 thing where you get 50% of the VA loan and then 50% conventional. But you have the $200,000 or $250,000 for your mobile home.
Proceeds from the sale,
that's your down payment. So we can work through that. And you can buy up to 3 million. I don't suggest you do it right now until you get your job as a nurse. And by the way, nursing is in high demand, so you can pretty much write your own check.
Thank you.
And thank you for doing that. I would pass out if I saw blood.
Thank you.
So Peen asked, so it's not if you're accepted, you get 765. I'm not sure I understand the question.
Sorry,
So
I just wasn't sure like what the cap was for the VA loan. I guess I must have missed it.
There is no cap.
well,
With
the VA doesn't have a cap, but lenders place a cap on it because it'd be out of control. So they have a cap at 3 million right now.
Okay. So and then I take it that range of how much you're qualifying for is based on income, credit score, and all that good stuff.
Exactly.
Um,
So if you have the income, you can go up to 3 million, as long as you qualify for it. And to qualify, the easiest way to calculate that, or a rule of thumb, is 50% of your monthly payment. For instance, if your payment is $4,000 a month, including taxes and insurance, you would need to earn $8,000 a month in gross income to qualify.
Right.
And 4,000, that's about $700,000 home. So yeah, 500,000 would be about 2,800. You'd need about $65,000 in income, and so on.
And you don't want to spend a lot of money buying a new car right away or right before. That'll screw up your debt to income ratio. If you have credit card bills, focus on paying those off, just because that's going to help with a lot of the qualification part.
Right, but I also advise not to pay it until you talk to either Romero or I, so that we can assess everything, because you may not need to pay those credit cards off or any of that, and you still qualify, and you can save that money for furniture or moving expenses or any of that.
Cool. That stuff you guys talked about, we asked that question, and I'm not up to date on these things. I just remember the Act of Congress thing. What was she talking about? Or you guys?
So God, this has been in the works for quite a while, but there was a bill that was proposed years ago where they would remove the limits on the financing for the VA loans. So prior to this the beginning of this year, 765,000 would be your max purchase price or loan amount without putting anything down. So if you wanted to buy $1 million home, you would have to come in with it's a reduced down payment, but you would have to come in with some money for the down.
So you would have a first loan and a second loan, right? You would have a first loan of 765, and a second loan of 240, 30, whatever, 35,000. But that would be down payment of that, right?
No. Okay. So this is the way it works. This is kind of juicy stuff. Okay. So the VA loan will insure 25%. Okay. 25% of the property value. Okay. So being that it was only up to 765,000, that would be the max. If you wanted to buy above that, say you wanted to buy $1 million, the difference between that would be, let me do the math really quick, minus 765, that would be 235,000. So you would have to come in with 25% of that difference, whatever the purchase price is, to the max county limit, which is 765. So if you wanted to buy a $1 million home, you would come in with about 60,000 down prior to this change. Once this bill went live at the beginning of the year, and now it's zero down.
Zero down.
Does that make sense? That 25% insurance.
How long does the process take from applying for a home loan until closing the deal?
It depends. It depends on how long it takes you to find a home. So to get you pre-approved, it's going to take about, let's just say 5 days tops. we gather all your info, gather your W-2s, all that stuff. We got to order your certificate of eligibility. Nowadays with e-benefits, you just log in, click, 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 and you can get it very easily. Unless you served in the 80s, but that's another joke. Look, I'll stop. I couldn't let that one go. So I get things going. I gather your W-2s, pay stubs, and all that. And then I'll issue a pre-approval letter, and then you go shopping. So that shopping part is where, you could find your dream home in 1 day, 2 days, or it can be a month. And then you got to submit the offers, gets accepted. Once it's accepted, about 30 days. So it's typically not a like overnight process. It's going to take a little bit. And the more you do up front, the more enjoyable it will be, the more fun you'll have.
Yeah. And there's always delays in a lot of different things. Like, you get your approval and you're like, Vito, I want to buy this house, but I want to put a bid under $100,000 under asking price. I'm probably not going to get accepted the first couple times. And there's some strategies that we can go around that. And then there's also, appraisers are being just overworked right now. And I alluded to that earlier. Right now, it's a refi boom, and appraisers are working 7 days a week, 20 hours a day. They're just exhaustedly working overtime. So and that's because everybody's trying to refinance, but we're also trying to help people buy houses, and those guys get the priority, but there's always delays in appraisals. And then sometimes there's questions. Sometimes there's some other issues that pop up. So you just got to be prepared for it. And that's what we do all the time. We know stuff happens. Like I was on the phone with another buyer's agent before this meeting happened. My explanation to her was, I know things happen. Let's shoot for 30 days. I'm not going to go crazy if it's 35 days that we close. It's just, you have to be prepared for that mentally. Okay. We have 2 more minutes. Are there any more questions?
Yeah, one more. If I am looking to buy like a townhouse, but have it be maybe temporary for maybe like 5, 6, 7 years, and then move out to a real house, would that how do you say, would I be able to sell it? Because I saw that you guys had something about not being able to like make money off the house, basically. Something like that.
No, that's an excellent question. I love that you asked that question, because if you start off with let's just say a 2-bedroom townhouse, and you're single, and that's your house, that's your startup, and then you get married, and then you have kids and more kids and more kids, and now you outgrew it. Well, the VA will allow you to rent that house out and upgrade to a bigger one. And you can still do the 100% financing. It has to make sense though, right? So the VA doesn't want you to use this as a business, to buy rental properties. But if you have a legitimate reason, like, hey, my family's growing, my parents, I've had this in the past where, oh, my parents are of age or retired, and we need to take care of them, and we don't fit in this house. Okay, we get a new one and then rent the existing. So it is possible.
Yeah, would it be easier if I just wanted to sell it just so I could get the bigger house? Because in case we start a family, would it be easier that way?
Yeah, absolutely. It's your choice. So you can either rent that house and then generate rental income from it, or you can sell it and then use that for a down payment on the new house. And if you don't sell it, you can still buy the new one with 0 down.
Got it.
Depends on your situation, your scenario, right? You could let's say you bought a house for $500,000, and then you turn around and sell it for $750,000. You have $250,000 in equity plus or minus, selling costs, etc. That $250,000 could be used as a down payment, and you could still use a VA loan. You don't have to use it as a down payment. It's just available to you. But when you think about it, you think about from a conservative standpoint, you don't ever want to touch that equity except for using it to buy and sell property for yourself or as a rental. there's a lot of different scenarios that you can do. You could take out half the equity as a refinance and use that as a down payment or closing costs or repairs or improvements for your new house. There's a lot of different things you can do that for. Or you could just be, I don't want to be a landlord. Let's just sell the townhouse. I want to buy a house, period.
Thank you.
It's 11:01. I want to be mindful of everybody's time. So I'm just pointing that out. Strike Brewery next Thursday.
Looking forward to it.
Obviously, this isn't your typical presentation. We're a bunch of veterans that are here helping other veterans. So I really enjoy this. We really enjoy this. It's a lot of fun. It's very relaxed. So yeah, there's a little trash talking from time to time. Hope you don't mind.
If you're not, if you mind, then I don't know. I don't know if you're really a veteran then. You have to get some kind of trash talking, right?
Maybe the chair force. No, I'm kidding. I'm kidding.
Space Force is the new one.
Oh man.
Totem pole.
Space Force.
All right,
That'd
so
be fun though.
Bob's gonna send you some links and some reminders and our contact information. So and we're available by text, phone, email, personal, face to face. You just however you want to do it. Just give us a question when you're ready to buy or sell. Let us know. We're happy to be here for you.
Or if you guys want to come play ping pong at our office, let's go. Ramiro's at the office right now, so it's like the ping pong tables right there. Or push-up competitions or whatever. Pull-ups.
They say.
What about skateboarding?
Oh, yeah, no. Not for a little while.
Not for a while?
I tore my tendon, so I had surgery just about a month ago, so that's another story. We'll talk about it next Thursday at Strike Brewery.
All right.
Between 4 to 6. Thank you so much.
All right, guys.
Rodrigo, you're very welcome. Yeah, man, that'd be cool if everybody shows up to the Strike Brewery. I think we have, that's going to be fun. Yeah. Cool. All right.
All right. So I'll get that email out
now
with all the information to all the students. And thank you all three of you for coming today to talk to my students about home loans and buying a house using the VA. And this is great. So thank you very much.
I appreciate you inviting us.
Very welcome.
Thank you.
Have a good day.
Okay, bye.
See you guys.
Bye, everybody. Happy Wednesday.
Do me a favor real quick, take 2 seconds and hit the subscribe button if you haven't already. Also hit the like, the little thumbs up, and the little bell so you'll be notified of upcoming videos.